Good morning, good afternoon, good evening. My name is Market Maker 69420, and in this episode, we're going to go over the midweek market open and how it affects the economy. As markets open on Wednesday, March 11, 2026, investors face a tense backdrop dominated by ongoing U.S.-Iran conflict, which continues to drive volatility in energy prices and broader risk sentiment. With February CPI data freshly released in line with expectations and oil rebounding amid geopolitical uncertainty, equities are showing cautious positioning. Tech resilience contrasts with pressure on cyclicals and energy-sensitive areas, while safe haven flows and inflation concerns add layers to the cross-asset picture. Let's get into a breakdown of the key developments across major markets at the open. Let's jump into the stock market. Major U.S. indices mixed to slightly lower in early trading, reflecting a stabilization after Tuesday's volatile close amid Iran-related headlines. The Dow Jones Industrial Average is hovering around 47,730. Futures up modestly pre-market, but spot reflecting prior close near 47,706, down 0.07% Tuesday. The S&P 500 near 6,790 to 6,780 levels, down 0.1 to 0.2% recently, and the Nasdaq showing relative strength near flat to slightly positive territory around 22,700. When looking at economic indicators and data released, February CPI came in as expected, around 0.2 to 0.3% headline, providing some relief but not fully offsetting inflation fears from surging oil. Real earnings data also released today, no major surprises, but combined with softer recent jobs data, it highlights a labor market that's cooling without derailing growth. When looking at Federal Reserve activity, no direct action today, but the conflict's oil price impact is pushing back rates cuts expectations, now potentially delayed to later in 2026, like September. Markets see low odds of a cut at the upcoming March 17th, 18th meeting, 2 to 3% chance, with focus on how persistent energy-driven inflation might bind the Fed's hand amid softening employment. When looking at earnings reports and corporate news, earnings season winds down, but today's late includes Campbell's, CPP, and others like UiPath, PATH after close. Mixed results so far. Oracle's strong AI-driven outlook shares up post-earnings support tech, while weaker guidance elsewhere Groupon weigh on consumer discretionary. When looking at tech analysis and sentiment, indices remain consolidation after recent swings. VIX elevated 25, signaling caution, broader sentiment risk off on geopolitics, but dip buying in tech persists. When looking at sector and style rotation, defensive sectors, utilities, healthcare, and energies lag, while tech and growth hold better amid AI optimism. Rotation away from high valuation cyclicals continues. Moving on to the commodities market, energy leads volatility with oil rebounding sharply on supply disruption fears, despite IEA reserve release stock. When looking at supply-demand balance inventory, oil inventory is stable, but potential straight disruption loom large. When looking at geopolitics and macro risk, Iran conflict dominates. Trump comment on G7 IEA responses add uncertainty. When looking at sector-specific trends, crude, WTI Brent around $90 to $91 a barrel, up 4 to 5% intraday at point. Gold steady near 5,180 to 5,190, now down slightly on dollar strength, but supported as safe haven. When looking at technical indicators, oil testing higher after pullback from peak, gold holding above 5,000 key levels. When looking at cross-asset correlation, rising oil pressures equities, inflation/rate fears, while boosting gold modestly. Inverse dollar moves cap gains. Let's move over to the cryptocurrencies market. Crypto remains subdued amid broader risk aversion, with Bitcoin and Ethereum showing limited movement in the 65,000 to 70,000 range for Bitcoin and 1,900 to 2,000 range for Ethereum based on the recent snapshot. When looking at volume, liquidity, and volatility, lower volume reflects caution, volatility elevated but not extreme. When looking at on-chain metrics and network activity, stable but no major surge, activity muted. When looking at correlation and risk sentiment, high correlation to equities, risk off mode, geopolitics weigh on sentiment. When looking at regulatory and news events, no major news developments, ongoing macro focus. And when looking at technical and behavioral pattern, range bound, potential rebound if risk appetite returns, but currently pressured. In summary, Wednesday market open reflects cautious trading amid persistent Iran war fallout and inline CPI data that offers limited relief on inflation. Oil's rebound keeps energy-driven pressures alive, tempting Fed cuts hopes and supporting some safe haven bids, while tech resilience provides pockets of strength in equities. Overall sentiment leans defensive, with volatility likely to persist until geopolitical clarity emerges or key macro signals shift. Investors should monitor oil flows and any Fed commentary closely for directional cues. That's all I got for you guys today. If you like the content, don't forget to like, comment, and subscribe. And if you'd like to support the channel, feel free to buy me a coffee on Patreon. Thank you. Bye-bye.